Good morning. This is Tommy Lackey, and today is April 2nd, 2014. And I thought we would just do a quick breadth review this morning so we can kind of take a look and see what the last couple days' action has done to our situation. Obviously, going into this week, we were looking into pullback zone, and we talked in the SIN report this weekend, Strength in Numbers report, about us getting close to areas that could become pivots. And I want to take a look through and see how that's panned out so far. Now, starting with the new high new low differential, as we always do, we see here that the last couple of days the new highs have sprung back up pretty nicely and brought the differential back up well into positive territory, as well as curled up the moving averages on this chart. After going negative a couple times last week, very briefly, we see that the markets are starting to curl back up, or the new highs are starting to show back up. And again, this was one of the main reasons from a long-term perspective we just could not get too bearish based on the action we were seeing. And when you couple that with our other longer-term breadth indicator, the advanced decline line, you'll see here it did break that first horizontal line as we came down, but it very quickly snapped back above it. And you've heard me talk before, when things snap back above a line they break real quickly, that's usually a sign of strength, not of weakness. So we see this heading back up towards the highs. Has not made new highs yet, but neither has price. So we're kind of watching the action, but so far this rebound looks pretty good in this scenario. Now, our third long-term indication was the percent above the 200 SMA up here, and it never really broke down either. Again, so none of our three long-term indicators really had a lot of problems. And as we see down here in the 50% above the 50 SMA, it turned up right as it crossed through 50. It pivoted back up, as well as the 20% above the 20 SMA never really made it down to the extreme level. And remember, guys, don't be looking for an extreme every single pullback. As you can see on this chart and some of the others we'll look at here in a minute, it just doesn't happen every time the markets come in. So don't look for it every time. We see here the McClellan oscillator in the middle window did the same thing. It came down close to the extreme level, but never quite made it into there. And again, that's okay. We made it to the extreme level in the last pullback at the end of January, and it doesn't have to happen every time. Now, the good sign here we also see is up here on the summation index. It's starting to curl back up above zero, which again, as long as we stay above zero, we're still in a good trend from an intermediate term according to this indicator. Now, as we move down here to the breadth thrust indicator, again, neither of the last two pullbacks went into extreme levels, but that's fine. It just shows there's some underlying bid to this market and some strength underneath, so we need to continue to work that as long as it's here. Okay, now we move into our final chart, the percent days chart. Now, as we can see here in the last couple of weeks, we've had a couple of 80% down days. Didn't get any 90% down days, but the 80% down days are enough to show a little bit of an extreme when it comes to a day's action. And as we see here, we did get a pivot back up after that fairly quickly. Now, at this point, the markets do look like they're showing a decent reversal. We have a trend line here, as you can see, a downtrend line that's not drawn, but pretty obvious that if we can break above that, it looks like we're heading back higher from here. Okay, so that should give you a quick overview of where we are on the breadth situation right now in the macro environment. And as you see, things look like they're turning up, and they held pretty well from a mid to longer term perspective, and the short term got fairly oversold. Not extremes, but like I say, we don't need that every time, and we don't even want that every time. If you get multiple extremes one after another, then you actually probably get a little more concerned in the overall health of the market. But where we are now, it looks like things are continuing to try to constructively move. This was a sideways movement more than anything, and now it looks like we're heading back higher. So if you like what you see here, please shoot me an email at gtlackey@gmail.com, and I'll be happy to add you to the weekly SIN report, which basically goes into all of these charts plus breaks down into the sector level as well. So I hope this helps, and good luck to everybody today, and we'll talk to you soon. Have a great day.